Welcome to Inside the Markets, official podcast of the StockPulse.com. Joining me today, Nick Hodge of the Outsider Club. Nick, certainly appreciate you spending some time with me here today. I know last time we spoke, we were in Vancouver at the VRIC. Gold looked good then. Markets were a little top heavy. We talked about could they keep going? Might there be a trigger? COVID-19 comes in, there's your trigger. Markets off. Gold looks strong. How does Nick Hodge see current conditions here in the markets?
That's a big, broad question, and the markets are a lot of things. The markets are stocks, the markets are bonds, the markets are rates, the market is gold, the market is cash, and all of that stuff is moving a whole lot. So I want to step back and let's go before virus, right? Let's go back to like December, January. The market's cruising along to all-time highs, right? Everything's hunky-dory. We're cruising at full employment and everything's all good. But really, it wasn't all good. If you go back and look, you'll see that corporate earnings were starting to fall before we knew anything about a virus. And you'll see that the Wall Street Journal was writing about how 40% of publicly traded companies weren't profitable. This is before the virus, right? This is the Ubers of the world and the Pandoras of the world and the Beyond Meats of the world and the Teslas of the world. All these big multi-billion-dollar companies that were money was going into, taking stocks to all-time highs, while everything underneath was not fundamentally as good as reflected in asset prices, right? And people in our spheres, in the resource spheres, gold bugs, uranium bugs, hard money bugs, whatever you want to call that subset of people, they had been pointing this out for a decade, but this is just a paper overing, but real wages aren't rising, but the problems from 2008 weren't solved, but you're still multi printing, but it's still QE. QE restarted last September, if you remember. The Federal Reserve was back in the repo market before anyone ate a bat or knew what a coronavirus was or any of this stuff, right? So what the virus has done is just sped along things that some of us knew needed to be sped along. And so the market response has been interesting. It's sad to see death. It's sad to see businesses ground to a halt. It's sad to see 22 million Americans lose their jobs in a couple of weeks. But I think some of the things that come out on the other side of this are going to be positive. I don't know if you want to talk about some of those things, but this has set into motion a whole bunch of things that are needed to happen. And the response has been crazy. I mean, the S&P lost a third of its value. It's since regained half of what it's lost. Gold has been moving by $50 or $100 swings every day. It's now at 7-year highs. Dollar is showing incredible strength, which is counterintuitive, but nonetheless, there's the DXY sitting at 100. Everybody wants their hands on dollars, including me. I've been going to the ATM like every other day. So it's not hard to see why the dollar is so strong. And you asked me for my market thoughts. I guess those are my market thoughts.
Let's turn our attention here to the precious metals sector. I know we both spend a lot of time here. Gold looks like it's in a really good spot. All the fundamentals are there. QE everything should be pretty set here. A, how do you see that? And then B, I've always tried to find true price discovery. What is the metal really worth? And to actually maybe take delivery of it versus just playing these contracts or the indexes. So I know you're not a bullion dealer, but how do you see this?
I'm fortunate enough to know some people who are plugged into that world. I myself am not a bullion dealer, but I'm a phone call away from people like Van Simmons, for example. Van is a co-founder of professional coin grading service, PCGS, literally co-founded the standard that all your coins are graded by, right? My partner was talking to Van last week, and Van was unable to buy the quantities of gold that Van wanted to buy at the prices that Van wanted to buy them. So I think that answers your question pretty explicitly, but I can go a little bit further because we saw a couple weeks ago the spreads break, the spreads between the London and New York spot price break. We saw the exchanges have to start accepting various versions of virtual gold, breaking whatever, 400 ounce bars into four 100 ounce bars to satiate contracts, stuff that's never been done before, unprecedented, widest spreads since the Hunt brothers cornered the silver market in the 1980s. So that physical market really broke. I heard Rick Rule give an interview this week. He was saying if you were to buy a single coin in cash from a dealer, you're paying 2,000 US dollars an ounce. And so there's the clear disconnect right there. On top of that, you've got mints shutting down, U.S. Mint saying they're not going to put out any more coins. I've seen that story around this week. And then you got a bunch of mines and development operations just shut down. So you don't have the raw inputs going into the mills and the smelters. And that's going to be a problem that gets exacerbated down the road. You know, before COVID, what was our catalyst for higher gold prices? Diminishing reserves, right? All these majors got to replenish their reserves. Well, now demand is up, and that's still got to happen.
So yeah, turn our attention to those equities. How will this play out? I mean, I don't have a crystal ball here, but there's been certainly some interruption here. Projects, maybe not being able to be worked on right now. Certainly planning for the big summer drill programs. Are we going to have a barren summer? How do you see this thing playing out?
I mean, I just literally hung up on a 1 hour Q&A call I was doing with subscribers, and I was addressing all this stuff. So it's all fresh in my mind. Like, it's case by case, right? I'll give you a couple of examples. One company I'm invested in is Mill Rock Resources, and it had just started a drill campaign in Alaska, drilling right next door on the claim boundary of the Pogo mine, which is an active gold mine, high grade gold mine. They think the ore body goes right onto their property. They get the drill rig set up. They poke one long hole. Mineralization looks good visually. They think they're in the ore body visually. Start the second hole. COVID hits. They got to stop the program. So where are we there? We got 1.5 holes. Visually looks good, but it's at the lab pending assays. So we'll see the assays when they come out. Another example is a company somewhere else, like in Quebec, for example, where last week, Quebec, all mining activities were shut down. So, and then it's case by case and locale by locale, like which provinces are allowing mining activities and which aren't, which countries are allowing them and which aren't, and which companies aren't affected. The insightful, or at least I think it's insightful thing I told my subscribers was that some of the equities we hold are development companies like a Revival Gold or a Midas, where they're not moving dirt, they're not building a mill, they're not drilling holes, they're going through a permitting process, for example, and so they're not negatively impacted. Their ounces in the ground are their ounces in the ground. It's just that they're worth more now. If their PEA was done at $1,300, well, guess what? Now you're at $1,700 gold, and we got to look at what those IRRs and those NPVs are now, and that's why some of those stocks have moved up, 75 or 100% just in the past month, and that's a taste of why people love these juniors so much, right? I mean, 100% moves in a month, and we're just getting started here.
So how do you see this moving forward? Do the mainstream markets rally back? For someone who's built a career around real money and sound investments, I would think that gold would look very attractive, to you right now. But this happens so fast. Has this changed your thinking at all, or is there any other maybe hot sectors you've identified, or is this just really bolster gold and the precious metals just might be the spot to be?
There's a lot there. So, one of my worries, of course, is that this thing gets papered over, and the change that we need to come into the system doesn't come, is kicked down the road another 10 years, 12 years, like it was in 2008. So there's multiple scenarios, right? If that happens, you could see a scenario where, stocks go back to all-time highs. The Fed is able to backstop this thing, and you get a record high in stocks. But I think that's going to come simultaneously with new record highs in gold prices and gold equities as well, simply because there's so much more money in the system. I mean, the Fed just came out $6 trillion in like 3 weeks. Like my head was spinning trying to keep up with the news releases and counted on this program and that program, and BlackRock's buying junk and high yield, and they're doing it through ETFs. And it's like, wait, what? It's all that money's going to have to go somewhere. Like, since 2008, that money went into stocks, right? That's why you had stocks at record highs when 40% of the companies weren't profitable. I mean, that's easy to see now in retrospect, right? Well, now guess what? There's 6 trillion more new dollars, and it's not all going to go into stocks. We're seeing that clearly. And then, you fall back on the old trope that the gold market is only the size as one Exxon, right? And so it only takes a little bit of that $6 trillion going in there to really breathe it up fast. And you're seeing that now with gold moving, as I already said, $50 or $100. There's going to be more $100 up gold days in the future.
So, yes, I mean, I think we both agree that these gold equities, but do you have some specifics here you want to run through? I know you mentioned Revival, Midas. What else is in your wheelhouse, and what are you talking about?
Oh man, I don't own a lot of stocks. I can start big and go small because you got to have your base, your producers or your royalty companies, and then onward down. I'm a Franco Nevada fan. I'm a Wheaton fan. I own those equities. Ivanhoe Mines really got this whacked over the past couple of months, and I had been actually waiting for that before coronavirus. So if I bought anything over the past couple of weeks, I'll tell you exactly what I bought, just like I tell my subscribers. One was Ivanhoe Mines I've been buying. That has already turned out well for me, and I didn't buy it to flip. I bought it because I know what those 3 world-class assets are going to be, right? Polymetallic, high-grade copper, the highest grade copper in the world, and so Ivanhoe is a great one. And then I like development companies with near-term catalysts. So it's no secret I've been writing about Midas for years. They got 6 million ounces of gold here in Idaho. They're expecting their EIS for public approval. The environmental impact statement here in Q3 of 2020, and that's a major, huge catalyst that we've been waiting for since this permitting process began like 3 years ago, right? So Midas is another good one. I just don't want to sit here and rattle off company names, but those are 3 real quality names to look at, albeit with different profiles, company profiles and risk profiles for investors.
Any wisdom to impart to investors here that maybe just got to the party? Things are very cheap right now. Obviously get yourself a guru, a pro, or learn how to do research. But I mean, is this the time to maybe to be a hero, to dive in? I mean, is there just very little downside here, or are we still kind of walking cautiously?
I think cash is still really king right now. You're in the teeth of the crisis. Mines are shut down. Volatility is still high. We haven't mentioned any sort of volatility. Volatility both in the equity space and the gold space remains high. And it could break really either way. That was one of your questions, right? Does it go back up? And so you need to be able to pivot. And in order to be able to pivot, you need to have cash. A bullion is always important. I wrote an article yesterday about my allocation. Some people go crazy, 5-10% of their liquid net worth in bullion. I don't go that crazy. I got 3% of my, liquid net worth in coins. And those have performed really, really well, even better than the equities so far. We know that's typically not how this plays out, but so far wold has been a good place to be. And another thing is really, I'm seeing things pretty clearly right now. And I would impart that you should try to see things more clearly, right? Like with conviction. Like there's 22 million people without jobs. We're seeing the worst earnings reports across the energy and financial sector that we've ever seen. The March retail sales were down over 8%, the worst month over month retail sales print that we've ever seen. This like ever, worst, ever. And you see all these worst ever numbers, but the stocks aren't down the worst they've ever been. They're only down 15% for the year. And so just keep with your conviction. We're in a bear market. Stocks are overvalued. Gold's going higher.
And how do investors follow you, Nick?
Oh gosh, outsiderclub.com is the best, or Nick C. Hodge on Twitter.
Nick Hodge, outsiderclub.com. Certainly appreciate the time, and definitely have you back up soon and try to figure out where we're going here.
You got it, Rob.